Today we're going to talk about taxes and insurance and how they figure into a VA loan. I get a lot of questions on this from veterans as well as realtors. So let's take this from the top. First, let's talk about taxes. In most areas, real estate taxes are comprised of state, local, city, and school taxes. And they are all figured in by the local appraisal district, who sets the value of the home, and then they set those taxes accordingly based on the percentages that they value that home. The monthly house payment figures into what's called an escrow account, and that monthly house payment not only includes principal and interest, but it also includes 1/12 of the property taxes that will be due at the end of the year, as well as 1/12 of the insurance. In the particular case in the state of Texas for 100% disabled vets that are 100% pay absolutely no property taxes whatsoever. That means property tax, school tax, city tax, county tax, all of that is exempt for 100% disabled vets. But here's what's important for you to know. This is not an automatic thing just because the veteran buys the house. It doesn't happen automatically. The veteran has to apply for this. They have to fill out the form that is available on the county website, or if you contact me, I'll be happy to get it to you. But still, the job is not done, because then what the veteran has to do is send a copy of that to the lender that's holding his loan, so they will know that these taxes have been stopped, and then they will stop collecting taxes on the property. Those things have to happen quickly, because the mortgage company is not automatically told that the taxes have been exempted. So that's a really important thing for everybody to know. Now let's talk a little bit about insurance. Homeowners insurance, there's also a little bit of confusion on that too. Homeowners insurance has nothing to do with life insurance or PMI, which is also called mortgage insurance. Please do not confuse mortgage insurance with home insurance or homeowners insurance. Homeowners insurance covers fire, liability, loss, weather-related issues, tornado, earthquake, hailstorm, things like that. It does not cover the home from a flood. It's very important everybody knows that. Rising water is not covered by regular homeowners insurance. If you want total coverage, you need to contact your agent and ask them to educate you on flood insurance and what that does cover. While we're talking about homeowners insurance, I get this question a lot: why are rates all over the board? And so recently I contacted 3 different insurance agents that I do business with, and I asked them that very question. And here's the general consensus. Homeowners insurance are based on not only the size of the property, the age of the property that you're buying is very important on this. Insurance statistics show that the older a home is, the more prone it is to have claims on it. The other factor that plays into this role is, what has the history been on the claims for the house that you're buying, if it's pre-owned, and also the applicant, that's the buyer, what has their history been for claims also. Also factoring into it is the client's credit score. The insurance companies tell us that the lower the credit score is, typically the higher the claims averages are. So all those things factor into how much the homeowner's insurance is going to cost. Another thing that is also a big factor in it is the home in the city, where the city fire department is available quickly, or is it in a rural situation, or is it out in the country where there's a volunteer fire department? All these items also factor into what the cost of the insurance is. And then the most recent thing that I've learned is they're going to ask you every time, do you have dogs? And if the answer is yes, they're going to ask you what kind of dogs. This is something brand new I just learned. I've been told by 2 agents, if the client has a pit bull or a Doberman, they just simply will not insure the home at all, because the claims that are starting to grow with neighbors or kids or people walking by that have been bit by dogs, the claims have gone through the roof on that. So that's another point that you're going to be asked about. And then finally, the most powerful thing is the word bundling. Kind of like cable and TV. If you combine your homeowner's insurance with your car insurance, you can get a nice reduction, sometimes as much as 20% on both. So that's also something to consider, is combining the cars and the home. So anyway, that's it. I hope it's been helpful for you. I always tell everybody it doesn't cost a penny to talk. So if you have any questions, give me a call and I'll be happy to answer all your questions. My telephone number is right here on the site. Thanks for tuning in today. Take care.